Right, moving on to the vol side of things. BTC realized vol shifting back down about 10 points on the week. Spot obviously remaining range bound between 27 and 30K. Whereas the 10-day realized vol on Ethereum was more stable at around 50% on the 10-day time frame as well. You can see that here. So if you look at the realized is yellow, realized and implied is very stable on Ethereum, realized shifting lower on BTC, whilst the implieds have stayed fairly flat, slipped a little bit lower, but nothing too dramatic there. Implied, as I say, implied vols throughout the week, FOMC and NFP events passed by without too much fuss. So that's why we did see vols drift slightly in Bitcoin. But then vols have bounced off the low as we came out of the weekend, and spot has dropped down a bit, right? A few percent we've lost in terms of Bitcoin spot, and Ethereum has followed suit. And then the front end is holding up a little bit as well because of US CPI out on Wednesday, which may have some sort of read through for the dollar and therefore crypto. Positive carry has returned in Bitcoin. Not massive though. So the gamma sellers, maybe there's a bit of juice left for them, but given where that carry is relative to the percentiles, it's still below median levels. So maybe it's not enticing enough. And then if we look at Ethereum, carries marginally, well, it's flat to negative still. So it's not, it's suggesting that Ethereum involves better to own rather than to sell right now. Now, crypto versus equity correlation has been falling all year. That's been a theme. Whereas the correlation of crypto to gold has been rising, particularly Bitcoin. Okay. And that's evidence in the dominance of Bitcoin, right? We've definitely seen on the upside Bitcoin leading the charge. And when things like the banking crisis that have brought a bid to gold have also brought a bid to Bitcoin. Now, gold, speaking of gold, gold failed to break all-time highs last week and maybe in for some consolidation now. So if that correlation with gold holds, then that means crypto markets may also be taken lower in the near term if gold does fall back below that 2,000 key level and drag things lower. So that's just something you need to be aware of. There is a dynamic here where gold may well be a driver into what Bitcoin does in the near term. Okay, looking at term structures, you can see they're pretty flat and they're not doing much. Ethereum's practically unchanged. Bitcoin very marginally lower in terms of what they've done on the week. As I said, they're failing to fall into the regular contango shape that you would expect because of the CPI data that is due. Okay, now realized vol has held up better in Ethereum. You can see here in the realized vol, the dotted lines at around 6 to 8 vol points, Ethereum over. And that's why I have seen a little uptick in the green line from the white line, which is the term structure of that spread. So you've got that spread back to, a couple of vols for Ethereum over this time. But it is a muted reaction, right? If the realized is 6 to 8 vols and yet the implies are still only trading at like a couple of vols over, it basically means that the market's unconvinced that Ethereum is going to move materially right now. And I think, I agree with that sentiment as long as that 17 to 1800 area of support holds. If that gets breached to the downside, then I can see Ethereum really catching a bit of a sell-off and accelerating. And at which point you would expect this vol spread to go back towards more normal levels at like 10 vols and beyond, right? So that's what I'm looking at. And then the ETH Bitcoin cross itself trading back into back in the range of recent weeks is giving us no real color or guidance. Basically, it's not approaching any levels or anything like that. So again, explains why people aren't getting overly excited about buying the Ethereum vols, even though they're realizing a bit better this week. Okay, looking at SKEW, after a brief excursion into call premium, when Bitcoin did test 30K last week, the front end SKEW reverted back to where it was in a small put premium for around 1.5 vols for puts over in the weekly. But as you move down the curve, as we mentioned last week, 1 month's trading at pretty neutral for SKEW. As you go to the back end, you're trading about 2 vols over for calls in the 6-month bucket. So the structural picture of longer term optimism led by things like the halving cycle narrative and a potential return to easy monetary policy towards the back end of the year, that still remains in place. And that's what's holding that SKEW for the upside in Bitcoin, we believe, right? If we look at Ethereum SKEW on the other side, that went into call premium as well for about a day as we touched 2,000 on Ethereum again, but did get rejected. Price came back down, and then we went back into a put premium on the weeklies and a deeper put premium than we started with at about 4 vol points. And then as we go further out the curve, that put premium does reduce, but for the entire curve, it still remains as a slight put premium. Okay, so the market continues to price that if ETH vol is going to come back to life, it's going to happen on the downside, and it's going to happen more in the near term, which is why the front end skews at -4 and the back end skews at close to flat. Okay, so that seems to be the general consensus, right? Medium term bullishness for crypto. BTC is likely to be the leader, and the dominance is going to be via that. But in the near term, Ethereum's at risk, and if we do go down in crypto markets, Ethereum's the one that's going to take the brunt of it. That is what the skew curve of both assets is telling us, basically. That's how I would read it right now. All right. Looking at the dashboards, as we said, we've got a small positive carry coming back here at +6, but it is in the 40th percentile. In terms of the strategy compass, it's saying buy calls because we are approaching the bottom end of the range. So yeah, I mean, if we're going to respect the range, then the next material move is higher. So I can kind of sympathize with that. Vols are quite cheap as well, which is why we're in buy calls. So if you did want to take a stab at crypto here, buying calls looks relatively attractive, can't deny. Now, I would say Ethereum probably looks more attractive, but then you don't have the same bullish narrative. That's the problem. So the vols are cheaper, and you can see that on a number of fronts where if you look at the vols, that they are literally on the lows, and then you've got carry, which is more neutral. So it's not positive carry either. And so, Ethereum looks cheaper, but the bull story isn't quite as clear because Ethereum's not the same as gold, whereas Bitcoin seems to trade much more like gold. So not clear. Personally, I'm not really piling in and buying calls on either right now. I'm waiting for an actual break of the range before I commit any fresh capital. But I'll talk to you about my actual moves in my book in a little bit. Okay, now if we move on to the flows. So option volumes continue to decline along with implied vols as we're trapped in this range. Directional upside does continue to be bought though in Bitcoin via various channels. So the main things we saw were outright calls on the 30K strike, which is this big one here across 12th of May, 26th of May and 30th of June expiries. We also saw this call spread, the 31, 32K call spread, and then July call spread, 40K, 46K call spread, much more out of the money, but buys you a lot more time to July. So that's getting bought as well. And also a September 30K, 40K call spread. So lots of calls and call spreads being bought all over the place still. So plenty of optimism who likes to buy the dip. And then on the downside, we did see some protection buying come in, puts and put spreads, very, very concentrated on the short end maturities. So 12th of May, 26th of May. And the strikes are basically anywhere from 28K down to 24K in Bitcoin. Okay, moving on to Ethereum flow. So they did turn more bearish this week. The Ethereum Foundation was apparently selling $30 million of notional of Ethereum. That sparked some concerns of a near-term top because that has acted as a bit of a signal for a near-term top in the past when they've sold stuff out. Looking at vol though, the Vega heavy clips were big sellers in the longer dated part of the curve. September 26, December 3,000 calls. We also saw some at the money 1900s being sold in September as well. So a fair amount of Vega supply coming to the street in Ethereum, which is, even though Ethereum's at kind of all-time lows in vol in that part of the curve, that's why it's there, because these sellers just keep coming. They don't care where it is, basically, right? For whatever reason, they're happy to supply it. Now, directional buyers were focused on the 2,000 strikes in 12th of May and the 2,200s or 30th of June. And we saw a big protection clip in the 30th of June, 1,900 puts that was bought on the 8th of May. So recently, basically yesterday, a decent clip went up there and in about 15,000 lots. So a chunk of protection being bought there at these low vol levels, basically. You can see this thing here. This is kind of like your heat map. This is, again, one of these really cool Amberdata tools that they've got out there, which kind of shows you the strike concentration of flows. So the deep red is like a lot of volume of selling across those strikes, 3,025, you can see. So you've got a lot of anything with upside strikes is very much biased to the sell side. And then you can see anything below is biased to the downside. So a clear trend of upside supply, downside demand, pushing SKEW higher for puts, and we're seeing that evidenced in the 25 delta SKEW that we track, that flow really filtering through to kind of pump up the ETH SKEW relative to the Bitcoin SKEW. Okay, switching gears to gamma positioning. So gamma positioning in Bitcoin is short and kind of has been there most of last week. It had a very brief test into positive, but flipped straight back again. If we look at the positioning around strikes, we seem to have this big risk reversal. These two red blobs here are a 12th of May risky, it looks like. 27K the street is short, and 27K the street is short, that's right, and 28K the street is long. So right here, right now, we do have a negative position in gamma. If we were to trade up above 28K, between 28 and 29K, that would probably flip into positive again. So that's probably going to take the sting out of any Bitcoin rally by the end of the week, basically. And then looking at Ethereum, we've seen gamma positioning in positive, small positive for most of the week. This kind of 18 to 2000 area, this range being respected. But looking at where the concentration of strikes are, there's a monster strike here at 1800. But that's not super short dated, right? It's got a load of positioning in June and May, end of June, only a little bit end of this week. So that's probably going to help hold the market, right? So even though we like the idea that ETH probably does lead to the downside, the gamma positioning, if it's got anything to say about it, is going to try and hold ETH here because that's quite a big long strike, whereas the gamma positioning on Bitcoin is short. So we would need to really pull away, like say below sort of 1700, maybe even 1650 to get away from this strike. So the gravitational pull of this strike kind of isn't there. But bear in mind, because those maturities aren't this week, the gamma on these strikes might not actually be that big. So it might do a poor job of holding the market anyway, to be fair. So I would say, yeah, you haven't got this big squeeze potential on the upside on Ethereum from this gamma positioning, that's for sure. And that's kind of been taken out as well on Bitcoin, right? The big squeeze potential on the rally that we've seen over previous months, it's kind of gone away now, it seems. Which kind of makes me favor maybe this thing's still got a bit of a breakdown to come, right? If gold's consolidating, it may well be that we need to test the lower end of that range, maybe get as far as 25K on Bitcoin. Who knows where ETH wants to go before we can really have a material leg back up again. Okay, so that's kind of what I would favor right now. Now, clearly, if we do break higher on a piece of news and then all the call buys come back in and flip the street short gamma again, then things can turn, and that's something we will track and monitor. But as things stand, I'm not overly scared of a sharp squeeze. Okay. Now, what have I been doing in crypto strategy? All right, that's it for crypto this week. I'll catch you all next week. Cheers.